Hello, everybody. Um, on behalf of Grant Thornton, Germany and Grant Thornton, Israel, I would like to welcome you to the webinar on how to do business in Germany in this session. In this session, we will explore the opportunities, challenges, and practical tips for succeeding in German markets. We look forward to sharing insights and tools to help you navigate and grow in this important market. In the 2nd of April, we'll have a second webinar in which we'll talk about doing business in Israel. So it will be mainly for German audience, but also for Israelis. I must start with my sincere hope for prompt and safe release of hostages, Israeli hostages that may soon be reunited with their families and loved ones in peace and security, especially due to the events that we heard that happened last night and still happening. I would share presentation. Yeah. So uh, I'm very happy and really excited to organize this webinar with GT Germany, because many years ago in the 1960s, something like 1965, my father, who was there one of the most important executives in core industries, started really the business relationships with Germany. And I feel that this is a kind of continuation to his efforts and to his initiative for relationship with the Germany, business relationship with Germany. When I was very young, I met lots of big German businessmen in my home when they visited my father. So I'm very happy to do it. People from the banking, if those who from Germany know Bank für Gemeinwirtschaft, that was busy, that not exist anymore, but was in our house a lot of times. So I'm very happy. I'm very happy to be here. And then here you see me myself in Munich Stadium in a match in the European Championship, Spain against France. And to those who are interested, Spain won 2-1 in this match. We are talking about two economies, very different. Israel is a small economy. Germany is a huge economy, the most important economy in Europe, to my precise. Population of 10 million in Israel and 83 million in Germany. Gross domestic product, we are talking about 559 billion in 24, and Germany is 4.5 trillion in 24. GDP per capita is quite similar in both countries. Growth in the 5 years, average growth is Israel is higher than in Europe, but we'll talk about about Germany in a moment. And then interest and the inflation rate, which are a little bit higher in Israel rather than in Germany. Here we see the new plan in Germany. And in the new plan that is about to take place, the plan will allow defense spending to bypass the rules limitation. And then we are talking about investments of about 500 billion special funds for infrastructure and projects. This is going to be, we believe, a big change in Germany, and hope it will take place. Growth rates in Germany, if you see the growth rate, let's talk about the forecast. So we see it about one minus around 1% during the coming years. And this is the forecast before the plan that we talked about the 500 million. I don't know how it will affect, but I do believe it is going to affect. Many companies are working, Israeli companies, tech companies are working in Europe. If you see here the last available information, we see about 900 companies and about 24,000 employees working all over Europe. But if you see only in Germany, and this from this information, you can see that the Germany, we are talking about 240 companies and about more than 3,000, and the figures now are higher that Israeli. So Israelis are already working in Germany, and I think this is and it is going to increase during the time. Um, we have here we are two firms here of Grant Thornton Germany and Grant Thornton Israel, and together we create the desk, Germany Israeli desk, that will help businesses between the two countries, all kind of services, valuations, raising money, funds, M&As, legal information, and so on. So we believe this is a start for a very good cooperation, and it might be very helpful for many businessmen from Israel and from Germany. So having said that, I hope we will have a very fruitful webinar, and I want my dear friend Matthias Reif to take it from here.
That's very kind of you. Hi everybody. As Mickey was saying, my name is Matthias, so I will be speaking to you in a sec regarding the legal topics. But before doing so, let me quickly hand over to Yaniv, who's going to give us, let's say, rather overview, an additional overview to what Mickey has just shown you, and then after that, we go into the subject matters first, tax, then legal, and then following the others. So maybe Yaniv, I may hand over to you.
Thank you very much, Matthias. I'll share my screen. Let me know if you can see the full screen.
We do.
See it?
Go ahead.
Okay, great. So I would like to thank Grant Thornton, Israel, and Germany for having me today. I feel really privileged. Thank you very much. Specifically now I'm in Israel, but I'm normally based in Berlin as the head of the Economic and Trade Mission, representing the Israeli Ministry of Economy and Industry. I only have about 10 minutes, so I'll try to stick to my times, though I would be happy to say further about it. So without repeating Mickey, so as you know, we're having this webinar shortly after having the federal elections in Germany. Based on the pre-elections poll, there are very little surprises, apart from one. The left party, the Linke, got more than it was expected. Other than that, the changes that were anticipated happened with the CDU, CSU getting the highest number of seats in the parliament. And I think in a way, the Germans had a bit of sigh of relief, as it seems now that the coalitions are going to be formed by two parties and not like the former coalition. And it's expected that this man that you can see, I think now on my screen, is going to be the next Chancellor of Germany. And the coalition will be probably formed by the CDU and the SPD. SPD is the former ruling party in Germany. And these election was only the third time that Germany went to early elections since 1949. So it's not very common. Maybe I'm speaking mostly to the Israeli audience today, but in Germany, it's not very common to have early election, or it wasn't very common to have early elections. And the background, I mean, I'm here to cover the economic and business point of view, but there were several reasons for these early elections, but principally it was due to criticism and due to a bit of stagnancy of the German economy without finding the right way of pushing this economy forward. As probably most of the listeners here heard about the debt barrier or the debt break, It's a constitutional thing in Germany that didn't let the government take extra funds or take a bigger debt to execute some economic reforms, and it will be interesting to see what happens now. Now, we need to remember when we speak about Germany, we don't really speak about the largest economy in Europe, but a very industrial country. This country is led by its industry. It's not like France or Italy or England. And one of the things that happened with the former or the current government entering into place as 2022 approached is a few factors I will cover too that I think affect the situation of the German economy, the current situation. Germany was much dependent on export to China, much more than its colleagues because of the industry. And in 2022, the trend had changed with exports to China starting deteriorating, even going the other way, where Chinese import, even in a way, started to compete with the German industry. Germany is famous for its car industry, and now there is a big competition, especially around electric cars in Germany. Second thing that happened in 2022, I think you all know, the industry in Germany was much reliant on cheap or competitive pricing for the gas that flew from Russia. This had gradually but very fast stopped during 2022 and also increased the prices of energy that affected the industry. It's important to remember that despite the leadership of Germany in the transitioning to renewable energy, in 2022, around 16% of Germany industry still originated from gas sources. Just the industry, talking about heating specifically, but the industry only. So it's definitely affected the competitiveness of this industry. If we try to see some kind of a lookout of where is the growth is going to come from, so Miki also presented that even in the, let's say, rather optimistic forecasting, we still look at 1 to 1.5% of a GDP growth a year. Let's say in the times of this new government, and it's a lot about where is this capital investment is going to come from, and what Miki touched upon is definitely very relevant. Now I want to give the Israeli angle to all of this and see why we see Germany as such a potential country for Israel. So in order to be more productive, we believe that this is where innovation is coming from. And I think also this is the way the German sees Israel, the German business sector sees Israel. There are a number of multinationals from Germany that put an R&D or innovation centers in Israel. You see this, just some examples on the list, but there are more. And there are a few dozens of other German companies that not necessarily established a full-scale R&D center in Israel, but rather have a representative, a scout in Israel that is here to find the new, innovative, relevant startups that can come to Germany and give added value to these companies, and it's not by chance. We can look at the figures, but we look at the $8 billion a year of trade in goods between Germany and Israel. So it's well established, the ecosystem is thriving, and it's on the rise. It's always on the rise, especially the exports of Israel to Germany. And if we add here trade and business services, that is something that we also strongly promote in the Economic and Trade Mission, we see the trend. Trade and services takes longer to update. So the recent update is until 2021, but we see the growing trend, which adds about a fourth of the total exports of Israel to Germany. Now, we are the Economic and Trade Mission. We try to focus on sectors that we see good synergies, that Israel can contribute a lot to the German industry and vice versa. And in every sector I present here, we have activities. For example, for energy, we focus on renewable energy. There is an event happening in Duisburg this July. It's called Elat Elot, an Israeli-German event. For healthcare, we have Medica every year in Düsseldorf. We have the largest Israeli national pavilion in the world. Happens every year in Düsseldorf. In the other sector, we either lead delegations of Israeli companies to Germany, like FoodTech, where we have next month, and also FinTech, or we lead delegations from Germany to Israel planned for this year, but we're not limited only to these sectors. It's important to say that. I'm part of the Israeli Ministry of Economy and Industry, and we have a network of 55 economic and trade missions. In Germany, we have 2 locations. I'm leading the office in Berlin. I have a local team of 5 trade officers, locals, German, that work for the Israeli industry. And we have another office led by my colleague Doron in Munich, in the consulate in Munich. And it's the only country in Europe where the state of Israel holds 2 offices, just to show you the importance that Israel attaches to its economic relations with Germany. Just in a very general matter, what we do and how Israeli companies can use it, and this is for the message for the Israeli companies. So apart from the activities we initiate, the exhibitions and the delegations and the online activities that we do, every Israeli company with a FET-pay, with taxpayer number, can submit a request free of charge or open up distribution channels to find new leads, key customers. We provide these services to Israeli industry for free in all the areas that you look here. Every time you reach out to us, you can also get information about the upcoming activities, the exhibitions that we're involved in, and how to engage with us in the best possible way. And each Israeli company is entitled to submit a request to us, even if it's not in the key sectors that I've just presented. Regardless of what you do, irrespective of your area of activity, you can get support from us in different ways. Just to give you a sense, our global system handles 4,600 requests by Israeli companies per year. Our office in Berlin is doing around 210 a year, just to give you a sense of the scope of what we do. So my time has come to an end, and I want to be polite and not exceed my time. I'm leaving here for like a minute while I'm saying thank you. My email, this is my office email, but I'm sure that my friends here in Grand Thornton will be happy to share my personal email as well. I'll be back to office from this short visit to Israel next week. Feel free to reach out to us to get more information, to look at our website, and understand better what we do. Now I'll say again, thank you very much for having me here to Grand Thornton. I'm not taking this for granted, and I feel very privileged. And looking forward to see the Israeli companies with the Economic and Trade Mission in Berlin. Thank you very much.
Thanks, Yaniv. So thanks again for you respectively, Mickey, for setting the stage. Now, as somebody who's working with Israeli companies for more than 14 years now, and actually, as I'm speaking, I'm sitting in Tel Aviv this week, which it's a privilege in any case, but also given the weather in Germany, I'm much rather in Tel Aviv as we speak. I have numerous, we are serving numerous Israeli clients in Germany and Europe, and the reason why we do this webinar and the reason why we want to share the information with you is because though we are very connected countries and obviously we all, you know, when we speak English, we all speak the same language, there are differences, and it is also important to understand the difference, not to celebrate the difference, but to know then, you know, what each country is actually doing and what they mean when they say something. And obviously there are differences in taxation, there are differences in legal and so forth. And so this webinar, what we want to show with you in the next minutes, for Israeli companies specifically, or funds or whatever, whoever you are, just to give you an overview on the taxation situation in Germany, an overview on the legal situation, etc. It's obvious that we can't go, you know, 5,000 miles deep. It's only just going to be, you know, giving you a rough overview, but we're going to take questions at the end. And obviously, we are all there for you to follow up specifically with you once you have specific questions. So having said all that, now allow me to share the presentation with you. And I'm just, it will be better for start from the beginning, but maybe a little easier. Okay, this is great, given that. All right, so you should be seeing now the presentation. And as I said, I will be talking to you in a second when it comes to the legal topics. But let us start with the tax regime. So I may hand over to my friend and colleague Matthias.
Thank you very much, Matthias, as well. And just in addition what Matthias said, so there is a joke under German tax advisors that 80% of all tax literature is in Germany and from Germany. So that's very important to understand. It's one of the most complex tax regimes in the world. So very important that any investment that somebody is doing in Germany, that they should involve German tax advisors, just to understand what are the implications of the investments and how to structure the investment to reduce the tax burden for that. Could you please move to the first page with the tax rates that are applicable in Germany? That should be page 9, Matthias.
Yes, there you are. Take a look.
I see only the first page.
Okay, so why isn't it? Apologies, but
so in general, we have different tax rates in Germany for corporate income taxes. That's a specifica of Germany, that we have the general corporate income tax, but also a trade tax. Yeah, please move to the page.
do you now see the right slide?
No, it's still page 1.
I don't know why. I don't know why it's not switching.
Maybe take it out and share again.
Yeah, it's better. Next page.
Okay.
And that's the right one. Thank you very much, Matthias. So
Okay.
that's, as you see, there's one corporate income tax. That's 15%. In addition, there's a solidarity surcharge, might be terminated with the new government in Germany, so that's under discussion. The second corporate income tax in Germany is the so-called trade tax. That's a municipality tax, and as the name is saying, that's depending on the location of the company, of the business. So that means by choosing the right location, you can reduce the tax rate by 10% points. Yeah, that's very important. So usually bigger cities with higher tax rates, smaller villages with lower tax rates, trade tax rates. So from that perspective, it might be important that you have that your company is based on the right location. Yeah, but it's not the only reason to decide for the location, but that is also one point that should be considered. Here I have implemented the tax rates for the real estate transfer tax. As based on my experience in the past, we have very often Israeli investors who are invested in German real estate. So for them, they are particularly focusing on real estate. Very important that the rate is also not one tax rate in Germany, but depending on the location of the real estate asset, the tax rate might differ. Yeah, value added tax is in Germany 19%. So we have also a reduced tax rate, but for 90% of my clients, the reduced tax rate is not applicable. That's the reason why I've only mentioned the 90%, what's the standard tax rate in Germany. Yeah, please move to next page. Yeah, the usually investments from foreign investors, not only from Israeli investors, but also from other international investors into Germany are free investment structures. is via a German corporation, usually a GmbH, via a semi-transparent partnership, German KG, and a fully transparent partnership, which is not subject to trade tax, is a non-commercial, deemed commercial entity, so we have no commercial activities. Is the fully transparent partnership. Yeah, that's usually used for investments via if you invest in German real estate. That's cannot be used for operating entities or operating businesses, because in case of an operating business, commercial operating business, the company would be, or partnership is semi-transparent. So that's 3 different types. So all of them not unusual. So if you acquire a business, it's not founded. So we have here mentioned not only Israel, but also Cyprus, because based also on my practical experience, very often Israeli investors are investing via Cyprus. If you invest via Israel or Cyprus and you acquire a German corporation, GmbH usually, it could also be AG, no corporate income tax applies, trade tax, no stamp duty. So that's common practice. That should be the same in Israel, which is very important. If you acquire a German partnership, then if trade tax is applicable, the trade tax is to be paid and will be imposed to the German partnership. So that's very important that there is an SPA in place that rules out that such tax will be borne by the sellers and not by the acquirer. So that's very important. If you acquire a German partnership, that is considered in the SPA. Yeah, here the next is real estate transfer tax. So there, under certain circumstances, you can avoid real estate transfer tax in Germany if you acquire a German corporation or even a partnership. But the law itself was tightened. Now it's important that there is historic, if you want to transfer 90% of the shares, that one historic shareholder remains in the structure. Historic shareholder mean that they were the shareholder before June 2021, but also after the 10 period that is the shareholder for more than 10 years. So it's a quite restrictive rules, but we have also implemented a tax optimized structure that two different investors can acquire 89% of the shares or less of the corporation. And if you acquire the shares in the holding of the corporation, that the second shareholder can acquire roughly 10% of the shares, so that 99% of the shares are transferred to new investors, and only one historic shareholder must remain in the structure with economically around or between 1% and 2%. Yeah, that's the tax efficient structure from the real estate transfer tax perspective, but it makes the structure itself very, very complex. So that's the reason why we not recommend this structure to long-term investors, but rather to private equity investors. The companies are only for, let's say, between 3 or 5 years. Then it might be an option to do that or to implement that more complex structure. But if you want to own the companies for a longer period, we would not recommend to do so. Next page, please. Yeah, this is the ongoing general taxation of each of the structures or each of the German corporation. As I said earlier, the corporate income tax rate is 15%, and plus a solidarity surcharge is 5.5% will be added to the corporate income tax. In addition, is 15.8% tax rate. So trade tax, depending on the location of the branch of the corporation, is approximately 15%. And as I said earlier, it's depending on the location of the branch or the office. So by choosing the right location, you can reduce the tax rate, but generally, if you decide, or if the decision only be made between Frankfurt and Berlin and Munich and Hamburg, they're really the cities here in Germany, then the trade tax is quite similar. It's not the same, it is similar. Yeah. The interest bearer rule, Germany was one of the first jurisdictions that implemented a limitation of interest expenses for corporation. So in contrast to other countries that implemented that rule later on, it's applicable for each unit, for each operating entity, and not, for example, as in other countries like the UK, where the interest bearer rule is applied on the entire group. Yeah. So, and there is a threshold in Germany up to 3 million. The interest expenses are fully deductible. If you exceed the 3 million threshold, the EBTR rule is applied. That means that your 30% of the profit of the company can be deducted as interest expenses. Yeah, so there's a strict limitation, so that needs to be considered. Dividends. There's a double tax treaty between Germany and Israel in place. If you comply with the substance requirement. So we have also quite strict anti-treaty shopping rules in Germany implemented. That means you need to fulfill it as a substance test. Then you can reduce the withholding tax to 10 or even 5%, depending on the participation owned by the Israeli company. Yeah, if the parent entity, the holding of the German corporation, is within the European Union, under the EU mother parent subsidiary directive, it can be reduced to 0, but all the reductions are subject to the substance test, and it's quite strict. That's very important. There is substance and substance not only mean that there are people and that they're in office, but also business activities must be proved to the German tax authorities. Next page, please. Yeah, the taxation of the fully transparent GmbH and Co. KG. There's one of my most favorite clients from Israel. They're using a semi-transparent GmbH and Co. KG to invest in Germany. So the operating entity, which is not usual of the company, which is based in Herzliya, is investing via German KG. What is the advantage? There are no withholding tax on dividends. Why? Under German tax rules, the profit of the German partnership is attributed to the limited partners, the general partners. So there's no payment between the limited and the general partners in the partnership. That's the reason why no withholding tax will be applied on such profit allocation or attribution. But what is the disadvantage? Even in case that the profit is not distributed to the parent entity, to the limited partner or the general partner, is taxed in the year where the profit was generated. Yeah, so you have the direct taxation. It's not like a saving box as a GmbH, where the tax rate is only 50%. Okay. In case of the exit, as I earlier said, if you exit, then you have the corporate income tax at the disposal. No CAT if you're selling more than 10% by a foreign shareholder. And the fabrication is liable for CAT if you're selling the semi-transparent or the fully transparent KG. Trade tax, no trade tax under certain circumstances for the GmbH. Semi-transparent KG is subject to trade tax. As I earlier said, it's very important that this is considered in the SPA. And the fully transparent KG is not subject to trade tax, as this is a not commercial operating entity. Real estate transfer tax at J, the same rules are applied as I earlier said. And the withholding tax, there is no withholding tax in the case of selling the shares. Thank you very much, Matthias, for pushing me.
I was doing my best, but here we are. No, I mean, I hear you, and it's a very complex matter. And again, I'm sure people will have follow-up questions specifically to you. But you know, at this stage, a good overview is what we need, and thanks for that, Matthias. So, following up on that, again, on the legal options, and again, I have to apologize. I mean, you may expect I can give you a 5 hours a legal run through here on this topic, but I really don't want to do that. I'm just going to touch on a number of options just to give you a sense of when you're thinking to enter Europe or Germany, what options do you have from the legal perspective? And again, as you can see on your screen on the left-hand side, I mean, obviously these are a number of reasons that I'm experiencing when I'm speaking to Israeli companies, that why they're entering Germany. Again, they're maybe not exclusive. You may have other additional reasons why going to Europe. But I mean, if you look at that, that probably covers like 90% of it. And if you think through these options, then the entry, from the legal perspective, entry options are different. So starting, you know, with production. So if you're the reason for you to go into Germany or Europe is to setting up a production site, then the entry options would not be necessarily a representative office or a partnership or something. The normal way you would do this would be through a corporation, and honestly, the general form is a GmbH. An Aktiengesellschaft is a share company, but the GmbH is quote unquote, and people may shoot me for saying so, but a limited. It's not exactly what it is, but think about it, kind of a limited. Or alternatively, a European legal form like an SE. But though I have to say 95% of not only my clients, but generally speaking, companies that go into Europe and Germany for production, they choose when they go to Germany, they choose a GmbH. That's like the standard legal entry form. If you think about another reason why companies come to Germany in setting up a German or European sales office, then the whole structure looks differently. Obviously, if you just want to have a sales office in the beginning, have some, you know, feet on the ground, then obviously a representative office or a representative who's not part of your company structure, but somebody you would through an agreement ask that person to be your person on the ground and promote your products. These then would be the normal ways to enter the market. Now, again, representative office carries a number of tax issues, which my colleague could again elaborate for another hour. So you know, don't do this hastily. You know, you need to think this through from various angles, legal, etc. But just from a legal perspective, that would be then the way how you do it. Real estate investments, like my colleague just said, you know, you normally go through a semi-transparent partnership. That is a nice way to do that. Alternatively, obviously, you can do this through a cooperation. And if you think about M&A, well, M&A generally, what I mean by that, doing that is then if Israeli companies come in and acquire either the shares or the assets of German companies, that normally is done obviously through by acquiring corporations, respectively, semi-transparent partnerships. The reasons, and again, one step backwards maybe, when I'm asked by clients, you know, okay, so what is the right way to set up a company, or where should I do it? And is Germany the right country, or shouldn't it be rather, I don't know, the Netherlands or something else? My standard answer is really think this from the customer, from your customer's perspective. It doesn't make sense to say, okay, what's the most tax efficient way? It doesn't make sense to think about it, you know, where's the nicest city or not, where's the weather best? It really has to, that your thinking has to be, what does it make most sense from my customer's perspective? And additionally, where do I have potentially the workforce that could help me achieving my goals? Again, then tax and other aspects would also come into play. But often enough, I have clients that are actually using Germany as a hub to the European expansion. And if you think about the slides that you saw from Yaniv, Germany, whatever, 200 or something companies in Germany. But if you looked at that slide specifically, you saw that like Israeli companies are all over Europe. Again, Netherlands, we have a lot of real estate companies that are used, but also Austria, Switzerland, and everything else. Often it is preferable to have one hub in Europe and use that to also enter other markets, because obviously the European Union provides for that solution. The currency is the same. You have free trade, free movement of trade. You have free movement of labor. So it's not necessary to have an office or an acquisition in every single country in Europe. Often enough, it is really to, at least when you start doing business in Europe, to use one country as the hub. And Germany is, for a number of reasons, your probably go-to country, not only from the geographical perspective, sitting right in the middle of Europe, but also giving the size of the economy and the opportunities you have from there going into rather, let's say, smaller countries. If you do that, then obviously corporations, or potentially if you are a little bit bigger and think a little bit broader, then the European legal SE would be the way to do that. And finishing this off with joint ventures, which I often see Israeli companies providing the innovative aspects to, let's say, the German industry. If it's not done through an R&D agreement, it's often being done through a joint venture, both companies contributing their assets into a new entity. Again, don't want to waste your time with going into details how you have to structure that. Obviously, in a joint venture, you need to think through also what could be the exit scenario. You need to think about on call options, on shares, and all these. Again, happy to elaborate that with you on bilateral calls. But as a general point, that would be normally done also through a GmbH. And again, finishing this off with R&D, which is often also a reason for entering the German market. That can be done very simply through a contract, but if it's more through a formal arrangement, you would also do this through a semi-transparent partnership or corporation. So if you looked at this closely, you saw that actually I was pointing to the GmbH more often than not on the various reasons. For that matter, let me quickly do a deep dive into some aspects of the German GmbH, just for, especially for our Israeli friends, so you understand, let's say, where the differences from the structure that you are very much aware here in Tel Aviv. So a GmbH, as you saw just a minute ago, and I think I hope I get the message across to you, is the most widely used form. It is a corporation. That means it's an independent legal entity with its own rights and obligations. It carries no personal liability for shareholders. I mean, that's important. If something goes wrong, it's not going to be your house at stake, but it's going to be just the value and the share capital of the GmbH. Different to what you know in Israel, we have two different organs. The one is the management board, and the other is the shareholder meeting. So, and that again is a very huge difference to what you're used to in Israel. You have two separate boards. You have the shareholder meeting. This is where the main decisions are made, and they can instruct the management board And the management board is, let's say, for the day-to-day business. It has at least one managing director, doesn't need to be a shareholder. It can be somebody you hire on the ground. And as I said, the shareholders can set up rules, internal rules and regulations, what this managing director can do and cannot do, where he, for example, I mean, within the limits of the law, obviously, but this is a general comment. You can tell the managing director, look, you know, if you want to spend money on a contract with more, I don't know, 30,000 euros, you need to first go back to the shareholder meeting and get our permission for that. These are internal rules. That's a little bit different to what the managing director can do on behalf of the company towards other parties. For that matter, if it's only one managing director, this person obviously can sign on behalf of the company. If you have two or more managing directors, you can limit that by saying they can only sign together. So by doing so, you have some, if the shareholder is not, or the managing director is not the shareholder, if you use somebody on the ground, you can limit that person's, let's say, authority also, and have more control from the shareholder perspective. When you want to set up a GmbH, in theory, there are two ways. Either you start that from scratch or you buy a shelf company. And I seriously would advise you to do the latter, because that is just the quickest and most efficient way. Shelf companies, there are providers that hold them. We then just change the articles, we just change the shareholders and etc. And it's done within whatever, 48 hours or so, depending on how quickly we get the information from you. But that is the way to do that, because if you start the company from scratch, that will take longer with the register and may raise a number of questions. So this is really, I really prefer doing so, and I really recommend that you go down that route if that is the way you want to enter the German market. It costs you a few thousand euros extra for that shelf company provider, but it's money spent worthwhile. On the managing directors, as I said earlier, these are natural persons. They don't have to be a German. They can very well be an Israeli citizen who lives in Israel. That's all fine. The only requirements that you have from the German law is they either have to have the necessary resident and work permit, or they would be able to enter Germany without a visa, which, as you know, that's obviously true for Israel. So you can jump on a plane in Ben Gurion every time you want to and arrive in Frankfurt. So an Israeli person here can be a German managing director. There are things that you need to consider, you know, with also tax-wise, but again, let's not go down too deep on this matter. And it may be potentially not practical because, as I said, the managing director does the day-to-day work, he does the day-to-day decisions. So you need to consider if this is really the right way to do this from, I don't know, Tel Aviv. But I'm just saying it doesn't have to be a German person living in Germany. Probably most recommendable because that's where the work has been done, but it's not required. The person is appointed by the shareholders, as said earlier, and obviously that person can be withdrawn from his or her position by the shareholders. And just to mention that, obviously, this person carries responsibility. So if that managing director breaches his duties or her duties, there could be personal liability. However, like in Israel, you would normally cover that through a D&O insurance. So that's nothing to worry about. Very last point here, and then we move on. How to acquire or sell shares in the German GmbH. It is a little bit like in Israel. Differences are there are no different classes of shares and all that. And people in Israel sometimes really scratch their head about this, is you need to go to a German notary to get that transaction through. There are a few things in Germany where you need a notary, and the reason for that is simply that the thinking is that these are important decisions and you want to have, let's say, a third person to look at you and say, look, are you really sure you want to do this? Have you thought this through? So the notary is kind of like a person that is managing the transaction. Normally, the drafts are being done by your lawyers, but you need to go to the notary just to get that formalized. That is a little effort. Normally, it's been done by us. For example, we will get power of attorney from you, and we do it on your behalf. It costs you a little bit to do that, depending on the value of the transaction. But that is, look, that's the way it is. How can I will phrase that? This is the rules. You need to keep that in mind. You can't just simply sell or acquire shares in a German GmbH through a contract that between two people who signed it on the last page. This needs to be formalized through a notary. All right, and again, maybe very, very last point, obviously, but that's the same as in Israel. You can restrict the transfer of the shares in your article through rights of first refusals, call put options and what have you. That it's not that they are totally free. Everybody's free to sell and buy shares. Obviously, in a company, you can modify your paperwork around the way that you would like to have it. All right, that's all from legal. And thus, let's move on to, let's say, more practical questions, funding opportunities, and for that matter, I don't know, Tom or Torsten, any of you?
Yeah, hi, thanks, Matthias. My name is Tom. I'm part of the debt advisory practice here in Grant Thornton in Frankfurt, and I just want to give you a brief overview of the lending and financing landscape here in Germany. And so Germany in general is more or less a mid-cap market, meaning that we are dealing with a lot of medium-sized companies with revenues between 50 million up to 1 billion of revenue, and we call it the so-called Mittelstand. And most of these companies are family-owned businesses and are typically financed via their local banks, which can be smaller regional banks, but also commercial banks like you all know, Deutsche Bank, Commerzbank, and so on. And the most common financing structure for these corporates we are seeing in the market and are dealing in our day-to-day business are classic bilateral facilities or syndicated loans. So corporates can finance their day-to-day business activity via a RCF, a revolving credit facilities, or amortizing loans. And the typical leverage we see in corporate transactions with banks, commercial banks, public banks, but also with cooperative banks are up to 3 times leverage or the maximum 3.5. And when we are dealing with acquisition financing, leverage buyouts or similar, we are more in the space of leverage finance, where other players besides banks, such as debt funds, come into play. And until 2015, I think it was, acquisition financing in Germany was mostly done by banks through their leverage finance desk. But that changed after 2015. And this development here in Germany was somehow politically intended, because banks at that time were prompted to do less risky business. And the amendment to the German Banking Act regulated that European funds may now grant loans without banking license. And since 2021, we see in the mid-cap acquisition financing market in Germany that almost more than 50% of the deals are done by alternative lenders, especially debt funds. And debt funds typically provide financing of up to 5 to 6 times leverage, mostly done via a unitranche. And over the time, many debt funds have also set up specialized funds here in Germany with focus on more opportunistic or distressed situations, which is increasing in importance at the moment, taking into account the overall economic situation here in Germany. And so last but not least, in Germany, we have also a substantial number of working capital and asset-based lenders, providing financing for receivables, for inventory, for their suppliers, which in our view tend to be a good addition to a company's main sourcing of funding, which is often the bank financing. And then if we move on to the next page, Matthias. I want to give you a little overview on the challenges we see, and from our experience, we are currently experienced that financing processes are more demanding than ever, which has to do with the more restrictive lending behavior especially of banks. Conditions are much more tighter than they used to be, especially in the SME corporate client business area. In terms of covenant, in terms of security banks want to have, but also when we are negotiating baskets. This has to do with the recession-like economic situation we currently have in Germany, as our colleagues at the beginning, also our Israeli colleagues at the beginning already mentioned. We pretty much had no GDP growth over the last 2 years, and this year doesn't look better. And but if there's one glimpse of hope, we see that the European Central Bank is decreasing the interest rate, which led to a slight uplift in the demand of loans we are currently seeing in terms of refinancing situations. Overall, financing processes, as I mentioned before, become much more challenging. They take much longer. If you set up a syndicated loan, you can plan up to 9 months to get the financing in place, which has basically to do with the credit analysis our banks are doing, which are more vigorous than they used to be, and they need much more information. They do a much more deeper due diligence and to minimize their risk. And negotiations have become much more complex, especially when we're dealing with collaterals and baskets I mentioned before, and also covenants. And the general economic obstacles we are also facing when we are dealing in our financing transactions are the high costs of energy and materials, which are still evident up to this date. We have a shortage of skilled workers here in Germany, which leads to projects which will be delayed or postponed. And we have the tremendous bureaucracy on our shoulders here in Germany, which we need to tackle to make it much more easier for corporates to focus on other areas. Next page, please, Matthias. So what kind of opportunities we are seeing currently in the German market from a financing perspective? We pretty much are hoping that the M&A market will accelerate in the next couple of months. I mean, one first step which was done to initiate a stimulus package by our new chancellor, hopefully. And we kind of hope that the M&A market will pick up in 2025, but I think Hanno, my colleague after me, will elaborate a little bit more on that one. As I said, boost of the German economy. Hopefully, stimulus package will come into place, and still there's some uncertainty when we're looking over the great ocean in terms of US tariffs and possible trade headwinds we are facing, especially as an export nation like Germany is. We will probably face a lot of more distressed and restructuring cases, which means that we also, as a debt advisor, have to be more creative in finding creative financing solutions. And last but not least, alternative lenders will have a more important role than they used to have in the past, meaning that we are dealing with much more debt funds when we are going to finance corporates, but also private equity firms are looking for alternative debt instruments. So you have to get much more creative. And that's it, basically, in a nutshell, from the financing.
Well, thanks, Tom. So Yep, some challenges ahead, but I still am personally the guy who sees the glass half full. I do think there are still a number of opportunities and to seek and to find ways into the German market. Especially when the times are a little bit challenging, then it is a good time to make investments and to prosper on the benefits going forward. Having said all that, I really would love to finish up the first round, you know, of the information with Hanno, who will elaborate a little bit on the M&A opportunities for Israeli corporates and private equities.
Thank you very much, Matthias. I'm Hanno. I'm the head of our M&A advisory practice in Germany and a 30-year veteran, some say, in the M&A advisory activity in the German market, with a strong focus on the technology over the past 25 years. Tom, I'll pick up on where you left with your upper left M&A market. Are there signs of hope? Yes, there are signs of hope. The activity is increasing, but the signs are still mixed. Deals, M&A deals in direct investment, be it corporate PE or venture capital, still take much longer than you would want them to take. Anything between 6 and 12 months is currently the rate for getting a deal done in the German market. And yes, the overall state of the economy drives certain opportunities, and we'll come to that in a second. First, let me get back to what Mickey introduced at the very beginning of our webinar, which was economic characteristics of the two countries. And I do say that Germany offers many attraction points, especially actually from an Israeli corporate and investor perspective. Germany, third largest economy in the world. We said it, largest exporting nation and largest economy in Europe. All of that means a strong basis of investment. And we already mentioned Israel's rank and Israel's importance as a tech and innovation driver in the economic world. And not to spare that, this is all 4-hour flight away and 1-hour time difference. So from an investment perspective, from a control perspective, for direct investments, be it corporate P or VC, it is actually a very attractive setting, I would say. Now, looking a bit deeper into the key sectors that drive German economy, I think it's Yannick that said, you know, Germany is a heavily industrial and industrialized corporate environment, with industry and manufacturing leading the way, specifically automotive, as we all know. We all know the key brands, and that only represents 13% of our GDP contribution in Germany, which currently is a bit of a burden given the state of that industry, which also covers and drives some opportunities. Chemical industry and mechanical engineering are the second ranking in GDP contribution, and electrical engineering is the fourth. Now, from a German perspective on Israel, it's really a tech and innovation nation. For us, it's 20% of tech sector GDP contribution. It's 40% of workforce in tech. It's 50% of high-tech exports, and it's 40% of GDP contribution coming from the tech and innovation sector in Israel. And for us, from an M&A perspective, that lays the ground for one of the mantras of direct investment and synergies between the two countries. Germany, as an export leader, is driven by innovation and innovative development as core sectors. And lots of that innovation actually has its source and ground in Israel research and Israel-based companies. And I had the pleasure myself in the past years to work with highlights of Israel tech companies in the mobility space like Optimus and Mobileye, or in e-commerce like Site, all having found their way into the German market by direct investment partly, and obviously by cooperation. So that for us is a strong basis for a synergetic joint economic development going forward. in the M&A market in all its aspects. Next slide, please, Matthias. Now, these synergies find a very fruitful ground by major challenges that the German economy is facing right now, aside the lack of growth and all of the other aspects of macroeconomic development that have been mentioned. The first is digitization, the digital transformation, changing processes, business models, and Germany has a lot to catch up there in digital infrastructure, in digital product and production, and in public administration. We are lagging behind. A portion of the huge investment volume that has been proposed and decided by Parliament very recently, for 24 hours, 48 hours ago, is going to address specifically that market. Now, money isn't all, you also need the know-how, and I think there is a lot of opportunity for Israel companies and Israel investors only in that digitalization aspect. Decarbonization is the second big challenge for the German economy and German companies acting in that economy. Significant changes need to be made to achieve the climate targets that we have set. Transition in the energy development of climate-friendly products, technology, and not latest or least mobility and obviously automotive. The third is, as we said before, automotive industry is the largest single GDP contributor in the German economy, and automotive transformation, therefore, it's currently the biggest economic challenge that the German economy is facing. Germany leads the sector, is facing multiple challenges: transition to EV, digitization, decarbonization, new entrants into the market, shift of the production and of innovation to other countries, specifically China. And I spare the tariff wars that is luring at the end of the tunnel currently, which will also strongly affect German automotive products. And last but not least, the German economy has a very singular problem, which is common to Western economic industries, but it's strongest in the German economy. It's the company succession. We have a myriad of small, medium-sized, and even larger businesses that lack a succession in this market. The problem is huge, and it's going to have a huge impact if no solutions are found. And the problem is accompanied by and driven by the other challenges, which is digitalization, decarbonization, and transformation, because all these companies need actually to invest, and in a succession situation, the willingness and ability to invest in transformation and the other aspects is just lower. So that is accelerating the rest of the problem. So to sum up on the slide, we have challenges in technology, in innovation, and in transformation that are driving our economy, and all of these represent actual opportunities for overall investors, but specifically Israel investors, because tech, innovation, and transformation are at the core of what we see is driving the Israel economy. Next slide.
And Hanno, before I move to the next slide, just a general comment to our audience here. So because after your presentation, we'll have a few more minutes for Q&A. So if you have already today specific questions to any of us, please use the chat. We'll get your questions and hopefully can already either provide an answer in this webinar or alternatively after that and come back to you on your specific question. So just mentioning that, so type your questions into the chat and we'll take care of that. Having said all that, Hanno, I'll move you to the next slide.
Thank you. So do we already see the sort of materialization of this thesis in one investment category very clearly, and that's venture capital, which is the most active area of direct investment of Israel companies and Israel funds in the German market by far, and that over the past 10 years. Now, we do see a certain movement in the M&A, so strategic investment, and we do see certain movement in private equity investment, but by far the strongest element is venture capital. And actually, Israel venture capital firms have very much contributed to some of the most well-known unicorns and their development in the very recent past, just Celonis, Personio, Trade Republic, Auto1, and N26, all in core sectors which have been mentioned before, I think by Yanis, which is, fintech, mobility, etc. So there is a clear conversion here in between the venture market and these specific tech sectors. Direct investment from PE and specifically direct investment from trade investors still lags behind, and we feel there's a huge opportunity actually that is currently being untapped. Talking more about that on the next slide, please, Matthias. Now, where are these sources for investment and M&A opportunities that the German market provides? The first these are four that we currently see and that are very live and that I'm very happy to also speak about in individual conversations following this webinar. The first is strategic adjustments. Given the pressure on transformation and economic pressure on German companies currently, we have a strong wave of portfolio adjustments of larger corporates and large family businesses that look at and assess their activity of their portfolio of activities and start to readjust and divest businesses that are no longer core, no longer deemed to be core, the part of the core business. This results in a number of carve-out transactions, the number of transactions which has strongest increased in the overall mix of M&A transactions in the past year. The second, as already mentioned, is company successions. We have more than 200,000 German SMEs currently, as of today, that are seeking solution for their company successions. 62% of them cite owner's retirement, 51% want to pass on by family, but the next generation lacks of interest or of capability. Many financial stable businesses are available due to lack of successor, and it is literally a huge market. Specifically, as there's in many of these cases, there's a strong lift up to be made in value of these companies if you then invest and drive, for example, technology or other levels of innovation. Third pillar is private equity exits. Given the development of the economy and the development of financial markets in the past years, we have only on German portfolios of PE investors a strong exit backlog. With, as we estimate from different databases, we look at least 250 overdue companies that should be in exit already or should have been exited, but that are not. And that is the backlog only of the past 2 years. Industries include energy service, software, mobility, retail, and these holding periods for investments are a burden to the PEs. So we estimate that as the market lightens up a little towards mid of this year and then the end of the year, we will see a little rally of exits starting now, PEs prepping now and coming to market. So that is a very short window of opportunity to actually execute probably very attractive M&A deals in this world. And last but not least, and the area that really Israel investors in Germany excel is venture capital, the venture capital situation in Germany. Venture capital is a shy market in Germany. We are still compared, if you take the comparison between German sized economy and venture funds available, there's a big mismatch. And especially currently, there are numerous companies in the VC portfolios that need funding, but that don't get funding from the German sources they already have. So there only is a huge opportunity. The second is many VC funds currently look at secondaries. So there's an opportunity to actually step into larger parts of the businesses at the venture side. And third is especially the late stage investments where companies are already further developed. They need bigger funding, and bigger funding is an issue in this market because big funds lack of size in the German economy. So these are 4 elements, I think, that are very concrete topics that can be elaborated if one is seeking direct investments in the German market. As said, happy to take this on in private conversations any time following this webinar.
Thank you, Hanno. All right. Well, as said earlier, our goal here was to help give you some information from various angles, be it from the taxation, from the investment opportunities, financing, legal, all embedded in the question of, what is in for Israeli companies to enter the German, the European market. We do believe we very much can help you figuring this one out. As you know, the setup of this webinar shows you, and as you obviously know, all these questions are entangled. Nothing of that can be seen as a standalone. This has to be looked from various angles, and decisions can be made, ideally touching all the bases and combining the expertise. For that matter, obviously, we within Grant Thornton, Israel, and Germany are here to help you. And for our Israeli friends, again, unlike in Israel, in Germany, as you can see from me speaking and me heading the legal M&A unit within Grant Thornton, Germany, VPAs and Grant Thornton offers also the legal service, obviously is different in Israel, as you obviously know. So come back to us, get in contact, and we'll answer your questions. We will make sure that whatever you have on your mind to move forward and help building the connection between these two countries and these two economies. We're here to help you. We very much enjoyed speaking to you, despite not seeing you, but speaking to you and giving you some insights into this topic. We very much hope that you took the one or the other topic away. We will share the presentation and obviously all the contact details with everybody on this webinar, also for those who unfortunately couldn't make it today. And sincerely hope that following what Mickey said earlier, that also the economic topics, the hostages and all that also, which is obviously on everybody's mind, that this will also be solved in a, well, I wouldn't say pleasant way, but in a way that hopefully is giving happiness to most people. We cannot forget that economy is not everything, but it is obviously a big topic, and for that matter, we are here to help you. Thank you very much. Have a great day, and looking forward to getting in contact to you on behalf of everybody who spoke to you here. Thanks.
Thank you, everybody. Thank you very much for participating, and bye-bye. Have a good day.